Hello friends, welcome back. Today we will be revising Equalization Levy chapter EL, a chapter introduced by Shri Arun Jaitley ji, our ex-finance minister, rather late Shri Arun Jaitley ji. This chapter for CA final paper 4 direct tax and international taxation. Equalization levy was introduced friends in financial year 16-17, not as a part of Income Tax Act. It was introduced separately. There is no separate act governing equalization levy. It was introduced in the form of Chapter 8 to Finance Act 2016. The way service tax was introduced in 1994 as a separate chapter of Finance Act 94, same way here Finance Act 2016 Chapter 8. There is no separate chapter for that. Equalization levy, what is the concept? The concept is to equalize between the taxation of traditional commerce transaction and e-commerce transaction. What is e-commerce transaction? You know pretty well, that is digital transactions. Traditional commerce transaction means type of transactions which we were conducting prior to e-commerce, that is, or even as of today also, we personally ourselves go to the shop, we make physical payment, purchase the goods physically, that is traditional commerce transaction. On the other hand, e-commerce transaction where things take place digitally. So what happens is, there is a difference between the taxation of two types of transaction. In case of e-commerce transaction, what happens is the transaction takes place in a place called cyberspace. Cyberspace transaction does not take place in any particular country or any particular physical location. Whereas traditional commerce transaction takes place on a particular physical location, which we call it as permanent establishment. Permanent establishment is in India, then Indian government will charge tax. Permanent establishment is in USA, US government will charge tax. So was not happening for e-commerce transaction, especially when it is cross-border e-commerce transaction, electronic commerce transaction, where selling party is located in one country, buying party is located in another country. The server through which transaction happens, that server is located in some third country. Number of years back, it was decided to tax e-commerce transaction. It was decided unanimously world over that country will charge tax wherever server is located. So what these international companies started doing, they started shifting their server to a country which is a tax haven country, Singapore, Brunei, Dubai, etc. So ultimately tax collection weaken. Now what happens is, somebody like Amazon, Flipkart, they are doing online transaction. They end up shifting their profit from one country to another country in a very smart way. Whereas family owned businesses or small businessmen who are doing traditional business, they are not able to shift profit to some other country, because of which these people end up paying a high amount of tax. Whereas online companies or those which are into digital business or digital economy or e-commerce transaction, they end up barely paying any tax. In order to bring equality between the two types of taxation or taxation on two types of transaction, there is one international organization, OECD, Organization for Economic Cooperation and Development. OECD recommended introduction of some tax called equalization levy. Equalization means making two things equal, making taxation of traditional commerce transaction and taxation of e-commerce transaction at par. To do that, this tax was proposed by OECD somewhere in 2015, and accordingly in 2016, immediately next year, India introduced this tax not as a part of Income Tax Act but separately. India is the first country in the world to introduce such tax, basically to capture these online companies. Not only, I'm not talking only about Amazon, but even YouTube, Instagram, Facebook, that is Meta, and many online gaming companies which offer games like PUBG. The idea was to trap these people or to capture these people. OECD, Organization for Economic Cooperation and Development, this body, they have 200 plus committees on different issues. One of the committee is fiscal committee, that is financial committee, which looks after taxation issues world over. The way we have United Nations Organization, UNO, UNESCO, UNICEF, that way we have this body called OECD, set up in Europe after World War I. This body, the fiscal committee of OECD, came out with some project called BEPS project. Under BEPS project, that is base erosion and profit shifting, base means profit. We have a separate chapter on this where we will be discussing this in detail. This fiscal committee of OECD came out with BEPS project in February 2015. There they raise some 15 questions or 15 issues which countries are facing world over. They named it as 15 BEPS concern. 15 BEPS concern means 15 issues which countries are facing world over, and they suggested probable solution also for that. They named it as the 15 solutions, they named it as 15 action plan. These are 15 suggestions of OECD's fiscal committee to tackle these 15 issues. The very first action plan, they are called action plan, very first action plan, which is titled as addressing the challenges of digital economy. Here OECD recommended couple of things. Number one, they recommended introduction of TDS, that is withholding of tax, and accordingly India introduced withholding tax on such e-commerce companies. Accordingly India introduced section 194O, which we are already done with in TDS chapter, 0.1% now. And plus they also suggested introduction of some new tax called equalization levy. India introduced that also. In fact, India introduced this first. This is also popularly called as Google tax. Okay, now why are we discussing all these things? Because our institute has been asking MCQ questions on this. Number one, they ask questions on this, under which action plan this equalization levy was introduced. They also ask question, equalization levy is a part of which chapter of Income Tax Act? Answer, it is not a part of Income Tax Act, it is a part of chapter 8 of Finance Act 16. It applies to the whole of India except to the state of Jammu Kashmir. On this also our institute has asked the question, you need to remember. Full form of BEPS also asked by institute, OECD full form not asked by institute. Okay, so equalization levy introduced as a chapter 8 of Finance Act 16, FS 16, by virtue of section 163 to section 180 of Finance Act. Now initially this was introduced only for online advertisements, only for payment for online advertisement. For example, Amul, the Indian company, places its advertisement on YouTube. YouTube is a US based company not having any kind of branch in India or subsidiary in India. YouTube does not have presence in India as of now. YouTube is a US based company. Amul is an Indian company. Amul made payment of, let's say, 10 lakh rupees equivalent in dollars to YouTube. On this 10 lakh rupee, which country is it accruing? The taxability of 10 lakh rupee under Income Tax Act world over, there are same rules. India has a rule that this 10 lakh will be taxable in India if either of the three things are in India. Either the recipient of income, that is YouTube, is resident in India. Either they are resident in India, then they will have to pay income tax on 10 lakh, or the place of receipt is in India, or the place of accrual, including deemed place of accrual, is in India. Income is accruing in India. Now, since YouTube does not have presence in India, income is not accruing in India, nor even deemed to be accruing in India as per section 9(1). Place of receipt is also not India, and YouTube is not even resident of India. YouTube not liable to pay tax in India. No problem, at least they might be paying tax in USA. But these companies, I am not talking about YouTube, it is a general common comment. Some companies similar to services, like providing services similar to YouTube, they were not paying tax in US also. They would locate their server in some tax haven country. Income will be shown in that country, and there is no income tax, there is no tax on income in those countries. Eventually, such companies were not paying tax in any country in the world. So to tackle with this issue, OECD recommended equalization levy. OECD said, we don't know which country is this YouTube located. It is located in USA, but which country they have their server, we don't know about that. We don't know which country they will ultimately pay tax, but at least we know that payer, that is customer, is located in India. Let's charge or let's impose some condition on the payer that payer while making payment to such person will have to deduct some tax or will have to deduct some levy called equalization levy. Equalization levy was introduced at the rate of 6%. So now Amul will have to deduct 6% of 6 of this 10 lakh, that is 60,000 Indian rupees, and deposit with government account if other conditions are satisfied. There are some 5-6 conditions in totality which I will show you in 2 minutes. But before that, the liability to deduct equalization levy is on Amul. This chapter was introduced in financial year 16-17, imposing the limit on Amul. Why it was not introduced as a part of TDS chapter? Why there was no separate section introduced? Why separate chapter or why separate act called equalization levy was introduced? Reason being very simple, that in case if this is introduced 6% as TDS chapter, as a part of TDS chapter, then YouTube will get credit for the same. Then YouTube will file IT return in India. YouTube will show its income taxable in India to be 0, tax to be 0, and YouTube will claim credit of TDS. If this 6% was introduced as a TDS, YouTube will claim 60,000 credit and eventually there will be refund of 60,000. So it was pointless to introduce this concept in the form of TDS chapter or in the form of TDS section. So separate tax was introduced. This 60,000, nobody will get any credit. No credit. This is not TDS or advance tax. YouTube will not get credit. It will lapse. Once paid by Amul, Tata bye bye, matter is over. However, this 6% equalization levy was introduced with effect from financial year 16-17 by Arun Jaitley ji. Nirmala Sitharaman ji, our current finance minister, in financial year 2020-21, she also wanted to prove something. So she also introduced some equalization levy. 6% equalization levy was introduced by Arun Jaitley ji. Nirmala Sitharaman ji she expanded the scope and introduced 2% equalization levy on something new. This was introduced with effect from 1st April 2020. At that time, Corona was going on. But this was announced in the month of February, 1st February 2020. In the budget, it was already announced. So it would be wrong to say that Nirmala Sitharaman ji, she took undue advantage of lockdown and she introduced this. Lockdown was announced from 23rd March 2020. However, this 2% equalization levy had a lot of technical glitches and lot of issues, and it was extremely complicated. Therefore, people requested to delete this. Accordingly, Nirmala Sitharaman ji, she deleted it from 31st July 2024. That means no more applicable from 1st August 24. 6% equalization levy still continues. It was introduced from 1st April 2016 and is still applicable. This is to be deducted by payer, Amul, and on the other hand, this 2% equalization levy was to be not deducted by payer, it was to be paid by recipient himself, paid by recipient from his own pocket. Okay, any which ways, this 2% equalization levy should have been deleted from 1st April 24, that is financial year 24-25 beginning. But why Nirmala Sitharaman ji, she deleted it from 1st August, putting sunset clause of 31st July? Reason being very simple. This she announced on 23rd July 2024. Finance Act number 2. That's why she could not do it retrospectively from 1st April 24. She had to do it from some later date. That's why 1st August. Otherwise, my guarantee, no question is expected on this in exam. On this particular 2% equalization levy. Question expected only on 6%. Equalization levy does not apply in the state of Jammu Kashmir. Before we proceed further, let me tell you, for this equalization levy, there is no separate staff available with the government. It is handled by staff of Income Tax Department only. That's one thing. Even appeal under Income Tax Act, which is handled by CIT appeal, JCIT appeal, ITAT. Same way here, there is no separate authority. Here also, appeal will have to be filed before CIT appeal or JCIT appeal or ITAT. Does not apply in the state of Jammu Kashmir. I hope you must have understood the introductory part, the genesis, the background, why this was initiated, why it was started. India is the first country to introduce this. Okay. Now, initial part of this chapter starts with some technical issue. Technical issue in the sense what problems or what technical issues were created in the taxation part because of e-commerce transaction. That is unimportant, that you can have a look at it. Question already asked. And who recommended introduction of this? Everything is covered here. Okay. So section 163 to 180 of chapter 8 of Finance Act. India is the first country to introduce this tax in the name of equalization levy. Chapter 8. Okay. There is no, this chapter extends to the whole country except of Jammu Kashmir. There is no separate staff for equalization levy. Income tax staff only handles it. And there is no concept of surcharge and health and education cess. Here 6% means literally 6%. So there are two types of equalization levy which I will explain you from here. %6 introduced in 1617, 2% introduced in 2021 but applicable till 31st July 24. Now this 6% is to be deducted by Amul, the payer in India, provided amount payable for the whole year by payer for specified service exceeds 1 lakh. Here there is a threshold limit of 1 lakh, but 1 lakh is a threshold limit. Once the payment exceeds 1 lakh rupee for the whole year, equalization levy 6% will be applicable on the entire amount including first 1 lakh. On the other hand, this 2% equalization levy is applicable in case of e-commerce transaction, applicable only if the sales, gross receipt or turnover of the e-commerce operator from e-commerce service or providing e-commerce service or from supply of e-commerce goods exceeds 2 crore rupees or is equal to 2 crore rupees for the whole year. Sales, gross receipt or turnover of the e-commerce operator like Amazon from the e-commerce supply of goods or e-commerce services exceeds or is equal to 2 crore rupees. Here 1 lakh, here 2 crore for the same year. Here equalization levy is to be deducted by the payer, whereas here equalization levy is to be paid by recipient himself. Recipient here would be e-commerce operator. What is this? Let me explain it to you. This 2% equalization levy. So supposingly you are buying a mobile phone, you are a customer, you are buying mobile phone of Samsung company, let's say Samsung India, which is a resident company. Samsung India. I am not talking about Samsung South Korea. Samsung India. But you as a customer are buying it through Amazon. Amazon will be called as e-commerce operator, ECO I call it as, and Samsung is non-resident in India supposingly. So you made payment to Samsung 70,000 rupees and thereafter Samsung passed on, you made payment to Amazon 70,000 rupees and then Amazon passed on to Samsung 65,000 rupees after retaining 5,000 commission. This 65,000 we already discussed in TDS chapter. Here TDS will be applicable on Amazon under section 194-0. Earlier it was 1%, now it is 0.1% with effect from 1st October 2024. Equalization levy is applicable on this amount 70,000 what customer pays to Amazon. This Amazon will have to pay on his own pocket, from his own pocket 70,000 into 2%. 1,400 rupees, no surcharge, no health and education cess. Now this 2% equalization levy is to be deposited on a quarterly basis with the government, whereas 6% equalization levy is to be deposited with government or paid to the government on a monthly basis. 6% is to be deducted by payer, 2% is to be not deducted by payer, not by customer. E-commerce operator will have to pay separately from his own pocket. 6% is to be deposited on a monthly basis and 2% equalization levy wherever applicable is to be deposited on a quarterly basis by 7th of the next quarter, by 7th of the next month after the end of the quarter, or you can say within 7 days from the end of the quarter. Okay, and here monthly basis by 7th of the next month, just like TDS chapter. So what is important from exam perspective is only this 165 and 166 section, that is 6% equalization levy. 165A and 166A, 2% equalization levy is unimportant. So let's try to understand what are the terms condition. So this 6% equalization levy governed by section 165 and 166 is applicable in case where the payer is particular person. Payer is condition number 1, payer should be either resident of India, resident in India, or payer should be permanent establishment in India of a non-resident. Payer should be so and so. Payee, that is recipient. Who should be the recipient? Recipient should be non-resident not having a PE in India, not having a permanent establishment in India. Permanent establishment would mean branch, and is making payment for specified services. Payment should be for specified services. Specified service ideally would mean online advertisement services. So the recipient is YouTube, Instagram, Facebook, Tinder, LinkedIn, etc. for specified services, and the payment exceeds rupees 1 lakh for the whole year, and the payment is for business profession of the payer, not for personal purpose of the payer, then all the conditions are satisfied. Payer will be required to deduct 6% of the consideration paid for this online advertisement services. 6% of the consideration for specified service. Number 1, payer should be resident in India or non-resident having a PE in India. Making payment to a non-resident not having PE in India. Payment should be for specified service, payment should be for business profession of the payer, and payment should exceed 1 lakh rupees. All the conditions are satisfied. Condition number 1, condition number 2, condition number 3, condition 4, condition 5. Then payer will have to deduct 6% equalization levy, 6% of the consideration, and deposit with government by 7th of the next month. Even for the March month also, due date will be 7th April. Unlike TDS chapter, where for March month tax to be deposited, TDS to be deposited not by 7th April but by 30th April. Here there is no concept of extending time limit for March month. Even for March month also, it is to be deposited by 7th April. And then the way we file TDS statement on a quarterly basis, in this chapter statement is to be furnished annually once a year in form number 1, statement of equalization levy, by 30th June of the next financial year, succeeding financial year. Means April to March, March the year ends, then April, May, June. After March ending, April, May, June, 3 months time is available. Otherwise there will be penalty. Other provisions we will be discussing. This is equalization levy under section 165 or 166. Payment should be for specified service. What do you mean by specified service? That also comes in the exam as a theory question, and even for practical question also you will have to reproduce the meaning of specified service. That's why remember 3 points. It is 2 plus 1. 3 services are called as specified service. Third one, why 2 plus 1? Because the third one is any other service as may be notified by government. Up till now nothing else has been notified. Therefore technically there are only 2 services. Number 1, online advertisement, that is making payment to YouTube, Facebook, Instagram, Google, etc. Or number 2, any provision for digital advertisement space. Provision means providing digital advertisement space, DAS, or providing any other facility or service for the purpose of online advertising. Meaning thereby, if other party, non-resident, is providing you the other services, say VFX service, jingle recording services for online advertisement, then that will also be subjected to equalization levy. Third, any other service as may be notified. Up till now nothing notified. Ideally it will be only online advertisement. In one of the past exam questions, institute did not clarify whether the payment made by resident to non-resident is for online advertisement or it is for offline advertisement. Then we had to write a diplomatic answer that if it is for online advertisement, then equalization levy is applicable. If it is for offline advertisement, like advertisement in a newspaper abroad, newspaper, magazine, journal, distribution of printed pamphlet, brochure, tract, then no equalization levy will be applicable. Okay, now there are how many requirements of the payer? Payer will have to, step number 1, deduct. Payer will have to deduct. After deducting, payer has to deposit, and after depositing, payer has to file annual equalization levy statement. If there is any mistake in it, rectification is possible, revision is possible. However, unlike TDS chapter, here there is no concept of issuing TDS certificate or equalization levy certificate, because in TDS chapter payee was going to get the credit. Here payee is not going to get the credit, therefore there is no concept of issuing TDS certificate kind of a thing. Secondly, as per section 10 clause 50, the income of recipient will be exempt under section 10 clause 50. Therefore, the question of getting credit of equalization levy does not arise. Okay, 3 requirements. Number 1, deduct, after that deposit, and after that file annual statement of equalization levy. If these 3 things are not complied with by the payer, Amul in our example, then payer will be subjected to penalty and interest and disallowance of expenditure. One by one we will be discussing. First requirement or first obligation of payer is to deduct. If not deducted, then failure will attract penalty under section 171, which will be equal to the equalization levy not deducted. In case of Amul, in our example, equalization levy was 60,000. If payer forgot to deduct, then 60,000 exactly will be the penalty. Second requirement is deposit. Deposit by 7th of the next month. If not deposited, then 2 punishments. Number 1, penalty under section 171, same section under which penalty was there for failure to deduct. Same section, there will be penalty for failure to deposit. Penalty will be 1000 rupee per day of failure. However, I would put an asterisk mark here. Here, this 171 section, this penalty should not exceed the amount of equalization levy. In our example, Amul making payment of 10 lakhs to YouTube, equalization levy was 60,000 at the rate of 6%. If the delay in depositing the equalization levy is more than 60 days, say the delay is 68 days, then penalty should ideally be 68,000. However, 68,000 restricted to equalization levy 60,000, penalty will be restricted to this. Plus, in addition to this penalty, there will be interest, simple interest. Government never charges interest on interest or compound interest. Okay, under section 170, which will be at the rate of 1% per month or part of a month. What do you mean by part of a month? Part of a month means if the delay period is 3 months and 1 day, then because of that 1 day, because of one single day, it will be counted as 4 months. That is called part of a month. And 1% per month. Unlike TDS and TCS chapter, here there is no concept of 1.5% per month. Interest will be 1% per month. Till what date? Interest will be till the date of depositing equalization levy to government account. And last requirement, third requirement is to file statement. If this statement is not furnished by 30th June of the next year, then it will attract penalty under section 172, 100 rupee per day. If equalization levy is not deposited, then 1000 rupee per day. And if it is an equalization levy statement is not filed, then 100 rupee per day penalty. Technically, this is what is needed from exam perspective. Rest all is totally unimportant, especially the second half of this chapter, that is equalization levy under section 165A and 166A, applicable in case of e-commerce operator. 2% equalization levy is totally unimportant. Okay, so let's discuss some further provision. Okay, it is applicable when the non-resident is providing, the recipient is so and so. Recipient is non-resident, not having PE in India. So, when is the equalization levy not applicable? Equalization levy not applicable in 3 circumstances. In exam, institute asked the question on this. You had to answer exactly this way. Number 1, in case where the non-resident recipient YouTube is having a branch in India, PE in India, then equalization levy shall not be charged, because then once it is having branch in India, it will be liable to pay normal income tax at the normal rate, and accordingly TDS will also be deductible, and in such situation no need to apply equalization levy. So fundamental idea of equalization levy was that the given amount paid by Amul to YouTube is not getting taxed in any country, especially in India. Therefore, to bring it within the tax net, this equalization levy was introduced. Non-resident recipient is having a PE in India and the services are effectively connected with the PE, then equalization levy will not apply, because such income will be chargeable to tax separately. Secondly, if the aggregate amount of consideration for the whole year does not exceed 1 lakh rupees in the whole year. And third, if it is paid for personal purpose, that means the payment is not for the purpose of carrying out business profession of the payer. These three you will have to remember. There is one more exception, Jammu Kashmir. However, it is not cleared here, it is mentioned somewhere else. Okay, to be deposited by 7th of the next month, that we are already done with. Now the second part, that is section 165A and 166A. Equalization levy at the rate of 2% on e-commerce supply of goods or e-commerce provision of services. Okay, here e-commerce operator is defined. This is applicable on Amazon type of people, e-commerce operator. So here in our example, Samsung will be called as e-commerce participant, ECP, and Amazon will be called as e-commerce operator. For the applicability of 2% equalization levy here, the e-commerce operator has to be non-resident. E-commerce operator means a person who is non-resident and is providing or facilitating the trade between customer and the e-commerce seller of goods. He is facilitating by way of having electronic or digital platform or electronic or digital facility like website, portal, app, etc. E-commerce operator means a person who is non-resident and he owns, operates or manages digital facility or platform or electronic facility or platform for online sale of goods or online provision of services or both. This definition not to be remembered, not to be studied again, just keep it in your mind that he should be non-resident in India. If he is resident in India like Flipkart, Myntra, Snapdeal, etc., Tata Click, then in such situation equalization levy will not apply. Why it will not apply? For a simple reason, if the e-commerce operator, the person who is receiving income, if he is a resident in India, then he will be charged to tax under normal income tax. That's why this will not apply. Then definition of e-commerce supply or service is unimportant, but it clarifies that Amazon can sell two types of goods or Amazon can provide two types of services, two types of goods to customer and two types of services. Number one, it can sell its own goods, goods owned by it. Goods owned by it means goods which are manufactured by Amazon or goods which are purchased by Amazon itself, in which Amazon is trading, own goods. And secondly, it could be selling goods which are, for which it is just facilitator, means goods belong to Samsung third party, Amazon is working as a mediator or Amazon is working as a facilitator. Amazon is just facilitating. Same thing for services also. Either the services are provided by Amazon of its own by keeping its own staff, or Amazon is outsourcing the work to third party. You as a customer place order with me that you want so and so services like Urban Clap or Urban Company. Either I have my own staff who can provide services to you, then I am providing services of my own. Alternatively, I can avail services of third party. For example, I don't have any plumber, electrician, etc. on my payroll. I am Urban Company. Whenever you place contract, whenever you contact me, whenever you place your order, I will arrange for a third party contractor or third party plumber, carpenter, etc. and send him to you. Okay. Then 165A subsection 3. For this, it's a complicated structure which I'll explain you very briefly and quickly. So what happens is, there are three parties: customer, Amazon, that is e-commerce operator, I will write ECO, who should be non-resident in India, and e-commerce participant. Now e-commerce participant may not be always there. Customer is making payment to e-commerce operator, but if e-commerce operator is selling its own goods or its Urban Company and providing its own services through employees on its payroll, then there will be only two parties: customer and e-commerce operator. E-commerce operator should always be non-resident. There is no e-commerce participant. Now for the purpose of applicability of this equalization levy on this e-commerce operator, there are some rules with regards to residential status. The rule is that e-commerce operator should be non-resident. always, in this situation, e-commerce participant, that is seller of goods or service provider, is either seller of goods or is a service provider. He should also be non-resident. The combination is this way, or combination is supposed to be this way. These two people both should be non-resident. These two people should be non-resident. Then only equalization levy will apply. As far as customer is concerned, customer should be resident. Customer should be resident. And in case of the second situation where Amazon is selling its own goods or providing own services, not services of e-commerce participant, then customer should be resident. Customer should be resident in India, and e-commerce operator should be non-resident. In any case, e-commerce operator should always be non-resident, because the whole objective of equalization levy was to cover those transactions where the person earning the income is not liable to pay tax in India otherwise under normal circumstances. Like Amazon, YouTube are not liable to pay tax. PUBG, Transcend Technology, Chinese company, they were not liable to pay tax in India. Therefore, this equalization levy was introduced. If this person is resident, then will be liable to pay normal income tax otherwise also, then equalization levy will not apply. So either there should be this combination or there should be this person. Customer should always be resident. However, Nirmala Sitharamanji carried out some amendment that okay, here customer can be non-resident also. When can customer be non-resident? If customer is also non-resident, e-commerce operator is also non-resident, e-commerce participant is also non-resident, everyone is non-resident, then how the equalization levy will work, or how should it be applied? Answer, then in such situation, equalization levy will still be leviable. Let me give you one example. Supposingly, there is one Chinese mobile manufacturing company, Chinese company, which is non-resident in India. They are the e-commerce participant. They are placing advertisement on YouTube. YouTube is also non-resident in India. YouTube is e-commerce operator. These two people are non-resident, both of them. Even the customer can also be non-resident, or customer can be. So this is not e-commerce participant. This guy is customer. This guy is customer. Customer is non-resident. E-commerce operator is also non-resident. Then how equalization levy, or why should it be applied? Answer, because here the payment is made for advertisement which is targeting Indian customer. Say Chinese company has contacted YouTube that show our advertisement of our mobile companies only to those who are resident of India or those who are using IP address located in India. Then in such situation, equalization levy will be applicable. Let's not go deeper into it because this has been put to an end. In this situation also, Nirmala Sitharamanji introduced equalization levy. Here it is next to impossible for Indian government to find this out. What if e-commerce operator does not pay 2% equalization levy here? Amazon or YouTube is liable to pay. YouTube does not pay 2% of this. Then how Indian government will come to know? And say Indian government will never come to know. So finally, out of compulsion, Nirmala Sitharamanji had to drop this idea and completely drop this with effect from 1st August 2024. So I have covered some transactions here, 4 types of transaction. So simply, e-commerce operator should be first situation, e-commerce operator, customer. E-commerce operator is non-resident, customer is resident, then in this situation, equalization levy is blindly applicable, definitely applicable. But if second situation, e-commerce operator YouTube is non-resident and customer is Chinese company, they are also non-resident, both of them are non-resident, then in such situation, equalization levy ideally would not apply, but applicable in some exceptional circumstances, applicable only in specified circumstances. And specified circumstances are 2, sale of advertisement, YouTube is selling advertisement, customer is paying for sale of, customer is purchasing advertisement, YouTube is selling advertisement, or Google or Facebook is selling data of Indian customers. either there is a sale of data of Indians, those who are resident of India, and the customer is non-resident, then equalization levy will be applicable on Google or Facebook. However, this is very difficult to apply, difficult to cross verify, difficult to check. Supposingly Facebook or Google, they pay 2% equalization levy, but they end up showing some negligible income. They say we have received only 1 lakh rupees for sale of data of Indian customer, but they might have received 100 crore rupees, and if they show 1 lakh rupees, then Indian government will never be able to cross verify. So it was dropped. Okay. Now 166A, by what date is this to be deposited? 2% equalization levy is to be deposited on a quarterly basis, quarter ending April, May, June, 30th June, then deposited by 7th July, 7 days from the end of quarter. Next quarter, July, August, September, deposit by 7th October. October, November, December, deposited by 7th January. Only for the last quarter, it's amusingly slightly different. Logically, for March ending quarter, January, February, March, there should be extension of time limit. But forget about extending. Here, Nirmala Sitharamanji, she kept the time limit to be not 7th April also, 31st March itself. So for March ending quarter, Amazon will be required to furnish or deposit this tax by 31st March. Why is it like this? Because Nirmala Sitharamanji said, we Indians have 31st March as a year ending. YouTube, Facebook, etc. they have 31st December as a year ending. December month they will be occupied, but March month they will not be occupied as much as we Indians are occupied, so they can furnish it by 31st March. Now common points between both the types of equalization levy. One is to be deducted by payer 6% and 2% is to be paid by recipient e-commerce operator. Okay, statement is to be furnishing statement in form number 1 by 30th June of the next year. However, belatedly it can be furnished up to 2 years from the end of financial year in which specified service is provided or e-commerce supply or services provided. If not furnished by 30th June, then 2 years available from the end of the financial year in which it was services were provided. Financial year 24-25 for this year, the normal time limit is 30th June 2025. Instead of 30th June 2025, belatedly it can be furnished up to 31st March 2027. That is 2 years from the end of financial year 24-25. However, if statement is furnished within time limit and assessee discovers any omission or a wrong statement, then it can furnish a revised statement again same time limit 2 years from the end of the financial year in which specified service was provided or there was a supply of e-commerce goods or provision of e-commerce services. That means for financial year 24-25 it can be furnished up to 31st March 2027, 2 years from the end of this financial year, belated. Original by 30th June, belated by this 31st March 27, revised also by 31st March 27. But supposingly 30th June deadline is missed out and it comes to notice of assessing officer that given person has not yet filed equalization levy statement, then AO can issue notice. If AO serves a notice, assessing officer serves a notice, then the time limit to submit equalization levy statement in response to notice will be 30 days from the date of receipt of notice, that is date of service of notice. Then time limit is 30 days. Otherwise, till 31st March 27 one can file. Then processing of statement. However, before we proceed further, just a small thing, who can file revised statement? If you recollect, assessment procedure chapter, section 139 subsection 5, in income tax return, revising of return can be done not only for original return filed within the time limit, but even belated IT return can also be revised. Here it is not like that. Here only those statements can be revised which were filed within the time limit. Belatedly filed statements cannot be revised. Why is it like this? Please read the language very carefully. If the statement is furnished within the time limit of 30th June and the taxpayer discovers omission or a wrong particular, if the statement is furnished within 30th June, then only you can revise. That means belated statement cannot be revised. Okay, now processing of statement. So if you are filing IT return once a year, then there is a processing of IT return under section 143(1), which is intimation. If you are filing TDS statement quarterly, there is a processing of TDS statement under 200A subsection 1, And for TCS quarterly statement, there is processing under 206 CB subsection 1. Processing means what? Processing means primary checking of the statements furnished, whether everything is proper or not, primarily, without making any adjustments. That is called intimation. Here also there is a concept of intimation, 160 under section 168. Intimation, assessee will be intimated about the tax or amount payable or refundable plus interest, if any, after considering whatever is already paid by him. This intimation can be issued only up to 1 year from the end of financial year in which statement or revised statement was furnished. Cannot be issued after that. In Income Tax Act, there is a lesser time limit, but this time limit is unimportant. Notice of demand is the next point in form number 2. Equalization's levy statement was in form number 1. Demand notice will be in form number 2. In form number 2, if anything is found payable by the assessee, then this demand notice will be issued to him. However, if anything is found payable as per intimation, then demand notice will not be issued in form number 2 separately. Intimation itself will be deemed to be demand notice. Rectification of mistake. In this intimation, if there is a mistake, then in such situation, assessee can apply for rectification. In Income Tax Act, one could apply for rectification under section 154 up to 4 years from the end of the financial year in which order containing mistake was passed or intimation containing mistake was passed. There the time limit is 4 years. But here, since the things are very straightforward, there is no complexity involved. Unlike IT return, here it is straightforward. So time limit is 1 year from the end of the financial year in which intimation was issued. If assessee discovers or AO discovers any mistake apparent from the record, there should be mistake apparent, means mistake should be glaring on the face of the record, then only rectification is possible. There should not be any debatable issue. In case if this rectification under 169 has the effect of increasing the tax liability of the assessee or reducing the refund, has the effect of increasing the liability or reducing refund, then such rectification can be done, but only after giving reasonable opportunity of being heard to the assessee or the e-commerce operator, OOBH, opportunity of being heard. Principles of natural justice require the opportunity of being heard to be given. Interest on late payment, this is interesting or this is important. Questions have already come in the exam twice. Question expected anytime again, keep it in your mind. 1% per month or a part of a month. Part of a month I already explained you, 3 months and 1 day of delay, then interest will be for 4 months. 1% per month. If the equalization levy is not credited to the credit of central government, not paid. Okay. For section 166, where the amount is to be deposited by 7th of the next month, or under 166A, where it is to be deposited within 7 days from the end of the quarter or by 31st March for the last quarter. This is the time limit that we already know. If not deposited within this time limit, then next day onwards interest will commence, which will be 1% per month simple interest. Penalty, section 171 has got 2 types of penalty. As far as equalization levy under section 165 is concerned, that is 6% equalization levy, there are 2 types of penalty under same section: failure to deduct, and there will be penalty for failure to deposit by 7th of the next month. But as far as section 166 is concerned, 165A, that is 2% equalization levy. Here penalty is possible for only one thing: 2% equalization levy is not to be deducted by payer, it is to be paid by Amazon, paid by e-commerce operator from his own pocket on its own. Therefore, here there will be penalty only for failure to deposit. Failure to deduct will be equal to amount of equalization levy not deducted, amount of, or I would say equal to amount in default. As far as failure to depositing is concerned or failure to pay is concerned, penalty will be 1000 rupee per day. 1000 rupee per day. However, the amount of penalty 1000 rupee per day should not exceed the amount of equalization levy involved. So, in the clause A, clause AA and clause B. Clause A and clause B are for 165 section. So, let us finish clause A first, then clause B, and then we will come to clause AA. Penalty for failure to deduct. Penalty will be equal to equalization levy. Where can there be failure to deduct. Deduction failure is possible only when the equalization levy is under section 165 and not under 165. Penalty will be in addition to equalization levy and interest. Or clause B, penalty for failure to deposit. Failure to deposit will be 1000 rupee per day of failure. However, penalty shall not exceed the amount of equalization levy which assessee failed to pay. Okay, and here for 165A, 2% equalization levy, clause AA, penalty will be equal to equalization levy. Sorry, not 1000 rupee. Here penalty will be equal to equalization levy not deposited, or which assessee failed to pay, e-commerce operator failed to pay to government. However, it is unimportant, so you can skip this. Penalty under section 172, 100 rupee per day for failure to file statement within 30 days from the date of service of notice. No penalty if there is a reasonable cause, just like income tax penalty. Here also, if there is a reasonable cause, then no penalty, and no penalty unless opportunity of being heard is given. Okay, then if somebody wants to file appeal, then where can he file appeal? So appeal can be filed only against penalty order. Appeal cannot be filed against intimation. Appeal can be filed against penalty order. Where to file appeal? So there is no separate appellate authority for equalization levy. Appeal shall lie to CIT appeal electronically in form number 3. Form number 1 is equalization levy statement. Form number 2 is demand notice. Form number 3 is form number to file appeal to CIT appeal, Commissioner of Income Tax appeal. There is no separate Commissioner of Equalization levy, and there after that one can file appeal to ITAT, Income Tax Appellate Tribunal. There is no separate tribunal for equalization levy. Here appeal will have to be filed in form number 4 as per section 175. Appeal to be filed electronically only, and the appeal filing fees will be 1000 rupee always. Time limit is same as Income Tax Act. 30 days for CIT appeal, 30 days from the date of demand notice, or 30 days from the date of receipt of penalty order, and for filing appeal to ITAT, 60 days from the date of receipt of order of lower authority, order of CIT appeal. Okay, then 176, 177 prosecution, totally unimportant. And then finally section 10 clause 50. According to section 10 clause 50, income of the e-commerce operator or income of the non-resident not having PE will be exempt if that income has been subjected to equalization levy. Income arising from providing specified service, that is online advertisement, or income from e-commerce supply of goods or e-commerce provision of services which is made, provided or facilitated on or after 1st April 20 but up to 31st July 24. These two incomes which is chargeable to equalization levy will be exempt from tax. However, this exemption will not be available on any income which is in the nature of royalty or fees for technical service under the Income Tax Act read with DTAA provision. If it is in the form of royalty or FTS, then equalization levy will also not apply, and exemption under 10 clause 50 will also not be available. Section 40 clause A subclause 1b, which we had discussed in PGBP chapter also, disallowance of expenditure. Now this disallowance is applicable for two types of default, number 1, number 2, exactly same as TDS chapter. If there is a failure to deduct by 31st March, by the end of the year, if equalization levy is not deducted by Amul while paying to YouTube, then Amul will be subjected to disallowance. Disallowance will be 100% of that 10 lakh rupees, 100% of the amount paid or payable for specified service, or it is deducted but not deposited on or before the due date of filing IT return, then also disallowance will be attracted, either not deducted by year ending or not deposited on or before the due date of filing IT return. What is the time limit to deposit? Normally, time limit to deposit equalization levy is 7th of the next month. However, for avoiding interest, one has to deposit by 7th of the next month, 12 times, 12 months, 12 time limits. But for the purpose of avoiding disallowance, it should be deposited not necessarily by 7th of the next month, but on or before the due date of filing IT return to avoid disallowance. It's a temporary disallowance. Disallowed amount will be 100% of the amount payable. Later on, if it is deducted in any subsequent year, or it was already deducted in the current year, then it is deposited on or after the deposited after the due date of filing IT return, then it will be allowed as a deduction in the year in which such equalization levy is deposited with the central government. From exam perspective, you just need to remember this equalization levy 6%, which I have summarized in 2 slides or 2 pages. Okay, you can have a look at it. What are the conditions? That's it. With that, this chapter revision comes to an end. See you in the next video with some other chapter.